Hey everyone, welcome back to Corporate Decoder. Today, Nuveen Municipal High Income Opportunity Fund just filed a 424B2 offering prospect US supplement, and I'm seeing a few critical financial adjustments that matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. The fund is opening up for more investors, and while they are raising money, the details of how much they expect to make and what it means for shareholders are laid out right here. So what we have here is a prospectus supplement from the Nuveen Municipal High Income Opportunity Fund. Think of this like a company announcing they want to sell more of their stock to the public. They are offering up to 1.2 million shares of their common stock. This means more money is coming into the fund, which they will then invest according to their strategy. They're aiming to sell 1.2 million shares. Each share has a par value, which is just a nominal value of 1 cent. The real value comes from the underlying investments of the fund. Now here is an important detail about how they price these shares. They will not sell them for less than the current net asset value, or NAV, of the fund, plus the commission that goes to the people selling these shares. The NAV is basically the total value of everything the fund owns, minus any debt, divided by the number of shares. So they're trying to make sure they don't sell at a loss compared to what the shares are actually worth. You can find this fund on the New York Stock Exchange under the ticker symbol NMI on the 8th of June 2026. The stock closed at $10.91 per S-share. But importantly, the fund's actual net asset value, or NAV, on that same day was $9.93. This means the stock was trading at a premium to its NAV on that date. Investors were willing to pay more than the actual underlying value of the fund's assets. This is common for closed-end funds. And they spell out a key risk here. Closed-end funds, like this one, can sometimes trade at a discount to their NAV. That means the market price is actually lower than what the fund's assets are worth. If you buy shares in an offering like this and the market price later falls below NAV, you could lose money. Let's dive into some of the summary details. This fund is managed by Nuveen Fund Advisors, LLC, and the actual investment operations are handled by their sub-advisor, Nuveen Asset Management, LLC. These are all part of the larger Nuveen, which is connected to TA. These are experienced companies managing a lot of money. As of March 2026, Nuveen as a whole was managing about $1.4 trillion, with Nuveen Fund Advisors handling around $157 billion of that. That is a massive amount of assets. They also explain how the salespeople get paid. It is a variable commission rate, and they're looking at a percentage of the premium to net asset value. This is a bit complex, but essentially, the sellers are incentivized to sell shares at a price that is above the NAV, and their compensation is structured around that. This part details the commission structure. It is based on the premium to NAV, with different percentages kicking in until certain compensation limits like 0.80% and 0.20% of gross sales proceeds are met. It's designed to align with the pricing strategy we mentioned earlier. Now let's talk about what it costs to be a shareholder. The table here breaks down the expenses. You'll see shareholder transaction expenses like a maximum sales charge of 1%. This 1% is for these at the market offerings. They also mention offering costs, which looks like it is around 0.10% of the offering price. Then you have the annual expenses. Management fees are 0.61%, and other expenses bring the total annual expense ratio to 0.75%. For a fund focused on high income, 0.75% is on the higher side, but not unheard of, especially for specialized municipal bond funds. This example shows what a $1,000 investment might cost over time. After 1 year, you'd pay about $19 in fees, and over 10 years, that adds up to about $103. This is directly from the fees we just discussed. While small on a yearly basis over a decade, it's a noticeable chunk. This next section is crucial for understanding how the fund's stock performs relative to its actual value. It shows the closing market price and the net asset value, or NAV, over different periods. Look at the fiscal quarter ended April 2026. The highest price they traded at was $11.04, but the NAV was $9.88. That is a premium of over 11%. Then you see periods where it trades at a discount. For example, in April 2025, the stock price was as low as $9.4, while the NAV was as high as $9.51. That is a discount of over 1%. This back and forth between premium and discount is typical for closed-end funds. It means the market price isn't always a perfect reflection of the fund's underlying value. The fund does mention that the board will consider actions to reduce any material discount, but there is no guarantee they will. As of the 8th of June 2026, the NAV was $9.93 and the price was $10.91. That's a premium of almost 10%. So when this offering happens, investors are essentially paying more than the NAV for the shares. So what will they do with the money raised from selling these new shares? They plan to invest it according to the fund's objectives. They anticipate investing it within about 3 months. If they can't find suitable investments right away, they'll park the money in short-term US government securities or money market instruments. This section details how these shares will actually be sold. Nuveen Securities is the main distributor, and they've teamed up with Stifel Nicolaus and Company as a sub-placement agent. They're going to sell these shares through what is called at-the-market offerings, which can include sales on the New York Stock Exchange itself. This reiterates the commission structure we saw earlier, highlighting that Nuveen Securities might be considered an underwriter in this process. This means they are taking on some risk and responsibility for selling these shares. This table shows the fund's financial structure. On the 8th of June 2026, they had about $120.6 million in common stock and paid in capital. After assuming they sell all 1.2 million shares at the 8th of June price of $10.91, the capitalization would adjust. The total net assets would increase from about $119.7 million to over $132.7 million. This reflects the new capital coming into the fund. It is a significant increase in the fund's size, which can sometimes lead to economies of scale, but also could make it harder to manage if the investment strategy is very specific. Looking through the table of contents, we see the usual sections: risk factors, management, distributions, and tax matters. Everything you'd expect in a fund's offering document. The prospectus summary mentions the fund's goal is a high level of current income that is exempt from federal income tax. They aim to do this by investing in tax-exempt municipal bonds. This tells you the core strategy: they're looking for income, and they want it to be tax-free at the federal level. This is a big draw for investors in higher tax brackets. Here is another snapshot from a slightly earlier date, the 3rd of June 2026. The closing price was $10.89 with a NAV of $9.92, again showing a premium. The fund has about 12 million shares outstanding, with net assets around $119.7 million. The financial highlights table gives us a look at the fund's performance over several years. We can see the net asset value per S-share, changes due to investment income and capital gains or losses, and importantly, distributions. For the year ended the 31st of October 2025, the beginning NAV was $10.1. They had net investment income of about $0.45 per S-share, but a net realized and unrealized loss of $0.17 per S-share. However, they distributed $0.46 per S-share from net investment income, meaning investors received a bit more than the fund generated in income from its investments that year alone. This can happen. Funds sometimes pay out more to maintain a distribution rate, which can include returning capital. This means the NAV can erode if the income generated isn't enough to cover the distributions. The ending NAV was $9.92, showing that dip from the starting $10.1. The total expense ratio for that year was 0.75%, as we saw before. Now, the risk factors are critical. They always say investing involves risk, and they're right. For this fund, significant risks include market fluctuations, interest rate changes, and how the fund uses leverage. Because they invest in municipal bonds, there is also the risk of defaults on those bonds by the issuers. This covers who runs the fund. Nuveen Fund Advisors is the main advisor, and Nuveen Asset Management is the sub-advisor. They detail the fees, which are layered. You have a fund level fee and a complex level fee. The fund level fee is tiered. For the first $125 million in assets, it is 0.45%, and it goes down as assets increase. On top of that, there is a complex level fee, which can be up to about 0.16%. As of May 2026, the complex level fee for this fund was 0.1545%. Importantly, the fund pays all its operating costs on top of these management fees. They explain how they calculate the net asset value, or NAV. It is done at the end of each business day the stock market is open. They take the total value of assets, subtract liabilities, and divide by the number of outstanding shares. If a price can't be easily found for an asset, it is valued at its fair value, determined by a designated person. This is important because it means they try to put a realistic value on everything the fund owns, even if it is not actively traded. This section is about how investors get paid. The fund pays monthly cash distributions, and they aim to distribute all or most of their net investment income each year, plus any capital gains. A key point here is that sometimes distributions can include a return of capital. This means they might be giving investors back some of their original investment, which can happen if the fund's income doesn't cover the planned distribution. This can erode the NAV over time. This is something to watch closely. This section revisits how the shares are being sold. They're using Nuveen Securities and Stifel Nicolaus. The sales are happening at the market, meaning they can be sold through exchanges. They also reiterate the commission structure, and that Nuveen Securities might be considered an underwriter. We saw this one earlier, the capitalization table. It shows the historical and projected financial structure of the fund. As of the 8th of June 2026, net assets applicable to common stock were about $119.7 million. After the offering, assuming all shares are sold, this would climb to over $132.7 million. This is a crucial part for anyone investing for the tax benefits. The fund aims to be a regulated investment company, or RIC, which means it generally avoids paying federal income tax itself. The big appeal here is that it invests in municipal bonds, and many of those offer income that is exempt from federal income tax. So, the dividends investors receive are often tax-free at the federal level. However, they do warn that some income might be subject to the alternative minimum tax, and other state and local taxes will still apply. This is a key point. While many dividends are tax exempt, if you are subject to the alternative minimum tax, some of those tax exempt dividends could actually be taxable for you. It is always best to consult a tax advisor on this. This just tells us that other documents like the Statement of Additional Information or SII and previous annual reports are officially part of this filing. You can get copies of these by calling a number or visiting their website. So, what is my take on this offering? The Nuveen Municipal High Income Opportunity Fund is raising capital to invest in tax exempt municipal bonds, aiming for high income that is federally tax-free. The fund has a history of trading at a premium to its NAV, meaning investors are willing to pay a bit more for it. The expense ratio is around 0.75%, and distributions sometimes include a return of capital, which can chip away at the NAV for investors in high tax brackets looking for tax-exempt income. This could be attractive, but it is crucial to understand the risks, especially regarding interest rate changes, potential defaults on municipal bonds, and how the fund's distributions are structured. The fact that they are actively raising more capital suggests they see opportunities in the market. However, the premium to NAV and the return of capital in distributions are factors that investors need to be comfortable with. The research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis valuable, hit like, subscribe, and join our Discord community linked in the description.